Eric Muathe from Muathe.com. Let's switch gears and take a look at another aspect of trading. Here's a good example of a stock. It's a Canadian stock, but what I want to discuss is how you would have at least had an idea that this was an important low. So we're going to take a look at how you could have used this period here with the RSI action here to re-enter the stock and possibly, maybe if you are lucky, ride some of this gain. Now, I discussed this extensively in my work, and you can check out lots of playlists on this subject matter by yours truly. And the principle is called uniformity. I discussed this on hundreds of videos, I believe, and take a look at this playlist here, or the other two playlists, and I go into details about this. So this concept is not new, and I want to discuss how you would have used this concept to get into the stock during this period here. So let's take a look at this, and this is a three-year weekly. Okay, so what we're going to do is 3-year monthly, excuse me. So what we're going to do here is we're going to go and take a look at all data monthly, so you can see why during this period here the stock was indicating a potential for a bounce. So go to the all data monthly now. This is what we have in front of us. Now, when using the uniformity principle, it's very simple. What you want to do is figure out where a movement began. So we can see here that there was an RSI movement here on hindsight that began this move. So that is the stock talking to you, and after this movement we see a huge price advance. Now what we do is we take that movement in the RSI and draw a line. The theory is this way: every time the stock comes here and on its own has uniform activity, here we can see perfect uniform activity in that the stock touched that green line and bounced. That means that this was time to go long, re-enter the name after this pullback here. So it's a simple method. I talk about this extensively, and you would have had a chance of at least having a concept here or an understanding that the stock could actually bounce during this period. And of course we can see that was very, very accurate in predicting a turnaround situation. Now is what I wanted to discuss in this video, but I also see here that this perfect example of what happens when a stock moves below RSI 50 and back above it again with uniform action. The key in what I've discovered here is that whenever you see uniform action or symmetrical action, markets are trying to tell you something. So here I have another concept called either the 50 RSI support with uniform action. If you use that concept, once the stock goes below 50 and back above it with uniform action, like it did during this period, the re-entry back above 50 is generally a buy signal. But for the purpose of this video, we were talking about uniformity. So let's conclude it by going back here. Figure out where a stock reacted positively if you are looking for a bounce, and this movement here in the RSI coincides with price coming off the lows here and going on a nice sustained run. We take that information, the stock is telling us next time it comes to this level and bounces with uniform action, we hold our nose and go long. And you can see this particular example, yes, it is hindsight, but since I've been doing this for many years, lots of examples, real time, here we can use this one to understand why we get this type of a bounce. The key is uniform action back to the previous perfect entry. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. Mwah.